This is Michael Zuber, author of One Rental at a Time. And this is, of course, your daily financial news. Before we get started, yes, today is day 4 of the Tony Robbins event. I will be attending that as soon as this video is over. But it is important for me to continue the trend of talking about the daily financial news. We have been doing this together every day for almost 2 years, I believe. And again, shout out to Gary Vee and Nipsey Hussle's conversation from all those years ago. It was the inspiration for this video series. As we get started, it is Sunday, so I will find time to do my goals video, my weekly wrap up, my impact score, really kind of looking at how am I helping people, all ending with how many of my students have done deals this week. Uh, Quick note, not quite the record-breaking year or record-breaking week of last week, but still, my students are doing deals. We are moving forward, and it's a blast to see people take the one rental at a time framework and change their financial future. In addition, I will do the community video and really talk about what is going on in the community this week. But alas, let's get into the daily financial news. The first thing we need to talk about is, as I've said for the last 6 or 8 weeks, we are almost out of this crisis. This recession, plan session, whatever you want to call it, is almost over. We are still in the last tail end of the tunnel, but it is clearly getting bright. We can all see it now. We have the $1.9 trillion stimulus that should get signed this week. Checks will likely go out this month. We've got unemployment extended through the summer. We've got money for schools and testing and states, and just going to be gobs of money running around in the system. So, a couple of things. First, let's have an honest discussion. Let's at least have some honest reflection about this last crisis. How'd you do? How'd you do financially? And, it's been harder on some than others, without question. But what I want you to think about is, what would you do different? How would you prepare if you could, if you knew it was coming? And the reason I ask that is I've been doing this 30 years, been looking at the market, and there's always something. There's always some big, dark boogeyman out there. Sometimes we see it, sometimes we don't. And I've been investing now actively through at least 4 significant crises. And there are lessons in each one. I will admit to not learning the lessons after the first one. And I think we all just need to talk about it, right? If you are, in your 20s, this probably was your first significant crisis. If you're in your 30s or 40s, probably your second or third. If you're near 50 like me, it's been a while, right? But what are we going to do to get ready for the next one, right? I do think we are going to come out of the gates hot. I think 2021, 2022, 2023, maybe even 2024 are going to be pretty good years, especially if what I see coming happens. The big infrastructure bill and shovel-ready projects, and we're going to bring some manufacturing home, and we're gonna have people relocate across the country because space is good and all of those things. But what are you going to do in the next 3 to 5 years to get ready? I think in this crisis we learned owning assets. Assets is a good thing. Now, if you're in the landlord space like I am, it's not all assets are not equal. Some people, some landlords, some small mom and pop landlords really suffered. You got to really watch tenant selection. You got to mix up your industries. You really got to really have to own tenant selection. A lot of the landlords that I spoke with that got really smacked or hurt this last year will admit to not being as rigid in their tenant screening. That's not to say that some really strict, I have the same box I've had for the last 15 years, and I got caught with a couple of folks that were playing games and working the system. So it certainly happens. No one's perfect. But again, what do you want to own through the next crisis? Again, I think something else we've learned is don't bet against the Fed. Right? Something we learned in the Great Recession is the Fed spent almost $1 billion kind of getting us out of that crisis. I think we're up to 5 or 6 billion this time. It seems like the medicine is having less impact and you need more of it. So what does that mean next time? These are all things you need to think about, right? Because, you're going to be living decades to come and you're going to have a couple of crises to invest through. So need to think about those things. The other thing that I think is really obvious and still underappreciated by the financial markets is millennials. Millennials are, increasingly, over 30, and they are going to move the needle in ways like the baby boomers did 30 years ago. And I don't think we appreciate that yet. The baby boomers still get a lot of hubbub in the press. Press is getting lazy. They're having less and less impact. I mean, just are. I think millennials are going to be moving markets. They could change cities overnight if they choose to focus and go there. They can hurt urban Class A apartments when they go to the suburbs and buy houses. We've really got to watch the millennials. I think, and then just to talk about, Bitcoin, if you will, as an example. If you're my age or older, our natural reaction, which is the one I had, is, that's tulips, that's a scam, it's fake, there's nothing there. But if you take the time to talk to millennials or Gen Z, they're like, yeah, it's just another way to buy stuff. It's for them, it's easier than cash sometimes. So if that's true, if millennials are going to start just changing our entire world in commerce and retail and housing, I think it behooves all of us to kind of try to figure out where they're going. What are they going to do? Is work from home going to be their thing? Baby boomers, right? They went to manufacturing plants and they worked on the assembly line and things of that nature when they were young. And then that evolved over time. Is the millennial going to be the digital nomad and work from anywhere, right? Just with a good internet and their laptops, phone maybe? What's going to go on? So these are questions I'm asking myself because I need to make investment decisions probably for the next 50 years or hopefully for the next 50 years. Again, we're going to be investing in a very interesting dynamic the rest of 2021. We've obviously got stimulus and cash and currency. If history serves, about half of that will just get socked away in savings and the other half will be spent very quickly. We have unemployment being extended, which will probably make it 16 to 18 months for some, which is really hard to believe, but true. The consumer is already opening up and getting interested. I walked around our local kind of street here in Mountain View and it was jumping this weekend. You can definitely still see that spring is in the air and summer is coming. The consumer is going to be interested. I think we're going to have a booming consumer. Again, what do I watch? I watch consumer and cost of capital. I think the consumer, for the most part, has been anxiously awaiting feeling better. And I was kind of suspicious of what I read about China and their consumers and their revenge spending once the lockups were done last year. Hard to believe. I didn't think that was possible, but now we've been kind of, at least some respects, locked down for a year in some very large states. I think it's coming. I think there's going to be a rush of spending. I think this spending is going to cause inflation because of supply chain gaps, just the ability to serve. And, will it be transitory as Jerome Powell certainly hopes it is? I don't know. I certainly know that Jerome Powell is going to go. He has to drop what I call Operation Twist. I've talked about that a couple of times. It's been only done twice, 1961 and I think 2010. I did a video on it, so you can go back and check the dates if important. But he is going to have to come out and sell the front end and buy the back end. Not many people are buying long bonds, as we saw in that really bad 7-year auction. The Fed's going to become the buyer of the last resort. They have to keep rates low through the year. Can't tell you where they go after that, probably higher. But I think we've seen the bottom, right? The 30-year mortgage is above 3% already. I think 3.02, kind of that psychological number has been hit already. Then we're going to have companies. I think companies are going to have to hire, which is great. We can finally get this 11% unemployment, which is U6, down to single digits. I think we're going to see inflation in input costs, both labor and goods, right? Commodities. I think companies are going to take a hit to profit in the short term. But if it sticks for the year, they won't do that long term. They will raise prices. And then obviously the big thing for the next 90 days perhaps is this stock rotation. Again, a lot of people out there, a lot of younger kind of YouTube entertainers are talking about a crash. I find that hilarious. This is not a stock market crash. Tesla is not the stock market. Yes, there are individual stocks that are being reevaluated for risk profiles and profits and discounted cash flow and all of those things. But the market was up 500 points, for goodness sakes, on Friday. What are you talking about? It's just a rotation. What worked the last 12 to 14 months probably won't work the next 12 to 14 months. That's what happens, folks. You need to understand when your assumptions, when something has changed. Another thing I've said is likely to come, and I saw the early signs of it in my little walk around this weekend, and that is businesses are going to start having grand openings. The street in Mountain View for me is called Castro. There were lots of store closures when I went and walked around 4 months ago in the depths of the winter. A lot of boarded up stores or newspaper on the windows. They're starting to come down already. This is the American spirit. This is entrepreneurs taking hold of the future. I think it is great. It's going to be exciting to see new stores come out. The last thing I saw that was kind of shocking is builders. New home builders are doing something I have never, ever, ever, ever seen. Increasingly, builders are no longer listing a price for their output for their construction unit. They're taking bids. They're saying, hey, we're going to have, this house, this model. It's going to be available on April 15th. They're going to take bids for 2 weeks. They're treating new construction, which used to have fixed prices and phases, like existing homes because they want a bidding war. There's so much demand. New home construction is doing something I've never seen. Now, I don't suspect that is wide ranging yet, but if it works, it very quickly could become the standard. And that will be shocking. That will be a red flag. That means the market's gone nuts. That's not healthy. Lastly, if you're one of my students, if you're one of my followers and you want to get a handle on your market, here's some homework for you. I suggest, if you can, go back and look at the following years and try to calculate, find the median price for your city, find the interest rate of that time, and calculate the payment. I want you to understand that real estate is not based on price, it's based on payment. So do me a favor, go back and calculate the payment for 2000, 2005, 2010, and 2015. If you do that, leave the comments below. I'd love to see. My suspicion is, at least in those 4 years, payments will have likely peaked in 2010. I'm going to guess in most markets they were probably lowest in 2010. For some of you, it might be 2000, but I'm going to guess most of you 2010. So again, one rental at a time, do your homework, understand it's not payment, or it's not price, it's payment. Have a wonderful day. Today's a great day to make some money, and let's be a little bit better than yesterday. Have a wonderful day. I'm going to go check out Tony Robbins' Day 4. Take care, everyone. Bye.